Hey guys, I'm Tim from Start Online Trading, and in this video I'm going to show you exactly what I discovered after watching thousands of charts over the last 10 years of trading. Before I give away this discovery, consider to subscribe and hit that notification bell so YouTube can notify you when we upload new trading videos. Chances are that you struggle to find good entries in the stock market simply because the stocks move too fast in the morning, and if you find one, you get shaken out only to see the stock moving in the desired direction without you. If that is you, then the spot I'm going to show you should help you to build a solid foundation and will get you more confident in your trades. Now have a look at all these 15-minute charts here and notice the spot I marked down. Look what happened to the price right at that spot. Price either continued in the direction of the trend or reversed a significant amount. Do you notice what all these charts have in common? Look closer at the amount of candles it took to reach that spot. The markdown spot is always around the same time, and that is between 11:15 and 12 in the morning. Now you probably instantly think that a lot of people, especially on YouTube, say that you should not trade after the morning session because it is dangerous and the algorithms take over, right? We actually say this too on our website, but there are exceptions to this if you follow a certain set of rules. These rules will help you to identify the stocks that are worth watching around this time of day to catch good entries. Before we go to the rules and examples, you probably ask yourself, why is that time important to watch, or why does it even happen? Most traders trade in the early morning, so the first 1.5 hours is where the most volume appears. The professional traders are usually done trading after that time, whether they play the stock to the upside or downside. The stocks then usually continue in the direction they are meant to be going. Now the volume may be lower during that time, it still has enough volume though for smaller traders to make a good chunk of money with relatively low risk. The only downside to this is that you usually have to hold the stock longer once you get in. So let's see what the rules are. Rule number 1. High volume push in the morning. You want a good early morning push on high volume or a push in pre-market that causes a gap with at least 4% price difference. It can also work with stocks that push 2 to 4%, but the higher the push, the more likely you will get a continuation or a reversal. Rule number 2. Check the way it moved into this time of day. You want price to move very narrow compared to the morning's move. It is best if you see price consolidating into this time of day with a breakout happening in the direction of the trend. There are two types of moves that can happen, either a continuation of trend or a reversal before noon. If you see price pulling back into this spot, it is a great sign that you should find an entry for trend continuation. If you have a very overextended move, which usually correlates with a high percentage move, you will very likely see a reversal. As you can see in this example, the stock has been beaten down hard by sellers with a huge percentage drop only to reverse at exact this time of day. If you take reversals, don't stay with them for too long, as they will very likely reverse back to the low of the day or even lower. Rule number 3. Only apply this to higher priced stocks. While you can see movement at this spot in penny stocks, we recommend that you only use it on higher priced, less risky mid to high cap stocks. I usually stay with stocks that are $10 and higher, as they show the most stable trading setups and are way less risky than low cap penny stocks. You are far better off trading higher priced stocks with leverage than trading high risk penny stocks that could even get you stuck in a hold indefinitely. If you want to learn more on how to trade with leverage with very little money, check out the link in the description below. Rule number 4. Still try to identify support and resistance levels for your entry. The spot I showed you is just a spot that you can watch out for trades. Finding an exact entry still requires you to identify a proper price level that you can risk off, since nothing in trading is 100% guaranteed. I will go over a few examples to show you how to find entries. Looking at the stock TLRY, you can see that it has been beaten down pretty hard after a huge run, and now it's actually starting to base around this level over here, and this is the day where it actually starting to gap up with over 5% on the day. We are looking at the daily chart of TLRY, and the one thing that interests me the most is the last swing high of the stock when I'm zooming in. And as you can see, the last swing high of the stock was right around this level over here, around $77, and we are already 1 hour into the trading day, and as you can see, the price actually already punched that resistance level. So I'm going to mark down that resistance level as a relevant level to push through. My theory is once price pushes through this level, it's going to run. So this is the 1 minute chart of the day. You can see we are already over 1 hour into the trading day. And as you can see, the price actually moved pretty choppy. You could have found some entries around here, for example, with a trend line break for a quick entry, but it actually pulled back pretty hard again. So we are still waiting for our time, which is around in about 45 minutes from now on, where we would want to find an entry for the day. So fast forward to 11 AM, you can see that the price actually pulled back even more to the $74 mark, which is a whole number, and the whole number actually seems to hold. So the next thing I would want to do now is to draw a trend line, which I can draw perfectly over here. And as you can see, that trend line is actually going right into the time zone where I would prefer to buy, right? That golden spot. So what I would want to see now is a break of that trend line, which would be enough for me to get a starter position and risk off that $74 level. And if I see it holding, I would actually even buy more. We will now see how price reacts when it breaks the trend line. Price slowed down quite a bit around this time of day, which is a good sign that sellers have given up and the price can continue in the direction it is meant to go. I would buy in on the trend line break, and I would buy even more if it pulls back, as long as it does not fall below the $74 mark. As you can see, price is consolidating nicely exactly around this time of day, showing a lot of strength from buyers, so we can assume that the remaining sellers will get caught in a squeeze soon, and this is exactly what happens. Price even breaks over the recent highs with a nice run to the upside. Let's have a look at another example of the stock VSM. As you can see, the stock actually kept up and ran over 15% on the day. I'm marking down a previous support level over here, which it actually broke during the day. Looking at the 5-minute chart of the stock, you can see that it has been very overextended during the morning and that it has started to show topping signs right around 11:30 AM in the morning. What you could have done here is to draw a trend line right like this and actually take a position right when that trend line broke right around 11:30 AM in the morning and ride it down at least to the support level I've drawn. Let's look at the final example with ROKU, which kept up over 7% for the day. On this daily chart, I'm drawing a trend line for the last few weeks, which it clearly broke with today's gap up. Looking at the 5-minute chart at 11 AM, you can see that the stock ran quite significantly in the morning, up over 20%. I've drawn a trend line as the stock is pulling back right into my preferred time zone. As soon as the trend line breaks, I will buy in with a starter position and then buy more when it can hold the last low after the break. As you can see, this trade would have worked out great, even though you would have to hold this position into the late afternoon. Some last words to remember. Trading the spot I've shown you should not be your main strategy, but a way to capitalize after the morning session is over. We usually trade this time with lower volume to not risk our morning profits. Don't watch stocks that are not within the rules. Some days you might find very little to no action. Don't trade this time just for the sake of trading. Last but not least, remember to be patient, as these setups may take time to develop. Be prepared to hold your position till the end of the day or even the next day. If you liked this video, please leave us a like and share your thoughts in the comments down below. If you want to learn more trading techniques and become a better trader, please consider subscribing to our channel and check out our free guide on our website start-online-trading.com. Thank you for watching, and I hope to see you in our next video.